Welcome to Bears in Exile. Today is Friday, May the 18th, and this is the market overview. Looking at everything that we look at, and I'm just going to get right into it. I wasn't able to make a video last night. We had a death in the family, and got called away. Wasn't good. So sorry for no video last night. And moving right along into the analysis. All right, another down day. Endless, unceasing selling, right? And yeah, absolutely. I know at this moment in time things look really bad, and you know, we just had Spain downgraded after the bell. So, except for the G8 over the weekend trying to swoop in to save the day with some crazy policy, which they probably won't agree on anyway, what is there? You know, what can you expect besides more selling? Well, here we are with the Dow, spinning top, and essentially down on everything. Histogram, MACD, RSI, 14-day RSI moving average, CCI, the stochastics are leveling out. At one point in the day, early in the day, it was higher. It looked like we were going to get an uptick on the MACD histogram, and that would have been a great sign. But we also posted in the daily running thread, by the end of the day it's probably going to get ruined, and true to form, it was ruined. And everything looks poor. Short-term moving averages all pointing down. A little bit of excessive separation, a little bit of wobble. Middle Bollinger Band above everything, below the the lower price consensus level. It all looks bad, and we don't have any real signs of rollover yet. Here it is. This is what gives me some inkling that the time is coming, and it's this. We have the stochastics. Look at their position. Massively low. I mean, this is scrolling out to 2009 so that we can see in proportion to you know, long time period where all of the indicators are. Oh, come on. Okay, sorry about that. Let's see if I can get my chain of thought back together. Okay, we had zoomed out. We were looking at all the indicators scaled out, and here was the point. The stochastics. Look how low they are. And matter of fact, they're the lowest they have been since 2009. Yep. Corresponding with this bottom in the first quarter. So does that mean anything? It certainly should mean something. I mean, every time you see it get to such extremes, it bounces back, normally taking the market with it, at least to some extent or greater extent. And even though the stochastics doesn't perfectly match up, I mean, sometimes it's low and then it just doesn't match up perfect. One that's more on the money is the RSI. And look at the RSI where it is now. Massively low. Hasn't been this low since... Well, let me line that up just right. Well, I don't have enough data. Well, even going back to, boy, probably almost, probably the first part or of 2008, maybe? Anyways, it's massively low. It hasn't been this low all year. It hasn't been this low all of the previous year. really the year before that too. So does that mean anything? I mean, this takes more time for it to turn around and go back up, but really when it gets massively extended, it normally jumps back in a couple of days. So combination stochastics and the RSI, their depth on the scale certainly should mean something. And there it is. SPX, fat body spinning top, essentially the same as the Dow, with the exception of the RSI going sideways and not going down. And scaling out, yeah, when we have a full scale, the 14-day RSI moving average still has a little room to move to the downside. But look at those stochastics and look at that RSI. It almost matches it right here. And then it bounces up. But every single little bottom of it, right away it keeps going up, and this one is lower than all of those. Does that mean that we should get a bounce now? Well, you would think. I mean, we've been expecting to bounce now for a week, and which would have put it right about here. And wish I had looked at it in this context then, but hindsight 2020, at that point it would not exceed all of these other little blips going back into 2011, 2010, 2009. It wouldn't have exceeded those, but now it does. Has it gotten ahead of itself? That is the question. Going back to the Dow, 60-minute time frame, seeing what we can see. We can see that everything is ticking down, with the exception of the MACD histogram trying to slant up and the RSI ticking up. Not much to go on, especially, I mean, that slant on the MACD histogram, very, very, very minor. But we still have the positive divergence that we've pointed out in some of the previous videos, and actually the RSI positive divergence has been broken. The MACD positive divergence still exists. So food for thought. Food for thought. The VIX. Whew! Look at that. I mean, who would have guessed that it would be so darn strong, closing above 25. It sure looks extended. I mean, it could be a higher angle. I mean, anything's possible, but still, it's just an amazing thrust. Stochastics holding high, 14-day RSI moving average still ticking up, CCI ticking down, RSI ticking sideways, MACD ticking up, MACD histogram ticking up. So it looks pretty darn strong. It has conquered even this high back here, and as of yesterday, and it would bring it up to almost $31 for the next resistance beyond the 200-day moving average, which we're very close to. Powerful looking chart. Once we get a downtick on the MACD histogram, that'll probably be the time that everything else starts to really turn, but we have no indication of that as of yet. TNA, breaking the 200-day moving average yesterday. We've talked about it getting close, and it did it. Wow. Not a spinning top, and everything, with the exception of the RSI, pointing down. RSI going sideways. What about this one? If we were to blow this one way out, does it make a new, multi-record low on the stochastics and such? No, it does not. It does not. It does correspond with lows. Very extreme reading. The only exception being 2011 flash crash, where everything fell apart. It just kind of hung out low. But except for that, it normally bounces back, bounces back, bounces back. There's another exception right here. where it hangs out low. So, odds-wise, the odds to me would indicate the bounce up is more likely, and the few instances of it holding low, unless we're going to have another flash crash right now, that would seem to be the odds to me. How about the RSI? Does it make multi-year lows? No, it does not, and that corresponds with the flash crash here, this low. Obviously, we have not had a flash crash. I suppose it's possible that it could keep going down, beat these, and we could have a flash crash. But and the 14-day RSI moving average is, pointing down and has room to move to the downside. But it's at one of those levels where there should be a bounce. The odds would seem to indicate that's more favorable. The news certainly doesn't agree with that, but we shall see. XOI, oil, beat up once again. Spinning top though, fat body spinning top. Down on the 14-day RSI moving average, holding low on the stochastics, up on the CCI, down on the RSI, down on the histogram very slightly, down on the MACD. We were looking for that tick up, and it was just wiped out by the end of the day. Would have been a really nice indication had it. And yeah, we can see the same thing on the other things. Stochastics massively low. 14-day RSI moving average does have room to move to the downside, but the stochastic is supposed to pop up and down. It's supposed to do this little zigzag, boop, 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 even when the 14-day is ticking down. And when that happens, even while the 14-day is ticking down, you get the little pops with the stochastics. You get these little minor jumps up, even against the 14-day, and that's how it's supposed to be. So even though this is turning around, pointing down, indicating more downside, unless it's able to reverse, even in a down move, this should have a pop in the stochastics to some extent and relieve price at least somewhat. So it's due for that. Same thing with the RSI. Not multi-year lows on the RSI, but still very great positioning for it to do a little bounce, do a little jig. So anyways, I won't rehash that anymore since that's on most of the charts. Going on to UUP. Aha, a downtick. Very nice. Fat body spinning top. People aren't believing it, and that's fine. Gives us a target of, just going to call it 2230. A nice little bit of a move to the downside that would relieve the markets. Stochastics are already rolling over along with the CCI, the RSI, the histogram, the 14-day RSI moving average, and the MACD are still pointing up. This is great. This is a good sign. So I do like that a lot. A bubble corrective move would be perfect at this moment. Perfect. Allow the long-term moving averages to strengthen, get some separation, while relieving the market at the same time. That's a good deal. And going on, FXE should confirm, and it does. Uptick on FXE, giving us an uptick target of 28.5. 14-day RSI moving average still pointing down. Stochastics turning, trying to turn. Up on the CCI, up on the RSI, up on the histogram, and still down on the MACD. Very nice. So great having a target. I think the likelihood of it happening is most likely high. Assuming that we can have a little bit of quiet in the news. Certainly we're not getting any let up in the news of Euroland. After all, sensationalism sells papers. Going on to Apple. Yeah, Apple's having some problems. Oh, we have this level here just below 520. Came pretty darn close to it today. Actually coinciding with the bottom of the real candle from this support level. Stochastics trying to turn. 14-day RSI moving average still pointing down. CCI up, RSI up, histogram down. Down on the MACD itself. 60-minute time frame. 14-day RSI moving average is heading up. Stochastics are already close to the bottom. They should be turning soon. Down on the CCI, sideways on the RSI, slanting down on the MACD histogram. That's not a good sign. And looking for a bearish cross on the MACD itself. It does look more bad than good in the short term. But after a reset, it should join the run up to join the 14-day RSI moving average. Maybe that's enough for it to get to the resistance level and then bounce. But yeah, looks like it needs a little more to the downside. That's unfortunate. GLD. Yeah. Gold has been way beat up, and I don't think that that's really justified. But people liquidate when they need money to cover, and people have been needing to cover. I think once that's done, and gold can be priced accordingly to fear, and not just the dollar, that it will go up quite a bit more. But today resolved an uptick that occurred yesterday. So that is done. So the rule is now to see what it wants to do. And you can see it's a little doji star indecision candle. Completely appropriate for finishing a bubble corrective move. Stochastics on the way up. 14-day RSI moving average ticking down, losing some of its momentum. Up on the CCI, up on the RSI, up on the histogram, up on the MACD. Not close to a bullish cross yet, but I would not be surprised if it does complete. Not surprised one bit. And, beyond that, 157 bar retest, and should have some magnetism towards the major price consensus level, a hair below 160. And SLV. This one's been getting rocked for a while. And it almost completed its bubble corrective move. Almost. So it's not going to be difficult at all for it to complete. Stochastics on the way up, CCI on the way up, RSI on the way up, histogram on the way up, MACD on the way up. Only the 14-day is yet to turn. So not a bad showing. Not a bad showing at all. Definitely positive. It'll be better to see what gold does after its bubble corrective move is finished, though. XLF, the financials. Oof. This is actually kind of encouraging. Interaction with the 200-day moving average. If it's going to bounce, it really should do it there. Stochastics and 14-day RSI moving average either holding low or ticking down. Down on the RSI, down on the histogram, down on the MACD, and up on the CCI. Whew. Bad looking chart. Can't have any real rally without the banks. So, 60-minute time frame. Is anything good here to see? Well, histogram is sloping up. MACD is close for a bullish cross, but it doesn't seem too enthused about it. Up on the RSI, sideways on the CCI, stochastics holding low. 14-day RSI moving average ticking down. It's going to need some kind of a catalyst to really move. Maybe we'll get that this weekend with the G8. JP Morgan, yeah, big bank. Oh, big bank, ugly. Wow, is there anything good about this one? Down on the histogram, down on the MACD, sideways on the RSI, very low. Down on the histogram, down on the Stochastics slightly up on the CCI. Yeah, that's reflected well with a little bit of a tail. Is it at any kind of support? Not really. Coincides with roughly with the major price consensus level from January. It shouldn't have too much hold on it since it's been so long. It'd be prettier if it had held here, or if it was right here. But now it has a little more room to move to the downside. So, yeah, that coincides with most of the indicators. So, maybe down to 32. I do think this one will jump quite a bit when it's time for it to, and it has a uptick. Just isn't there yet. And anything else? GE, try to get a better read on the Dow. Yeah, no body. Very interesting. Holding above the lower price consensus level. Stochastics on the way up. 14-day RSI moving average leveling out, up on the CCI, up on the RSI, up on the histogram, up on the MACD. Totally different than the Dow. So this may be our tell that, yeah, the Dow is going to bounce. So that's not bad. That's not bad at all. And I think that's going to be about it. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.